Hey everybody, Phil Town here from Rule 1 Investing. Today we're diving into top trends that investors should pay attention to in 2023. As the year goes on, it's going to get crazy, so keep watching for a rundown of the Rule 1 approach and how we learn from the best investors in the world. Okay, so what kind of trends are we paying attention to coming out of 2022 volatility, so many things going on for 2023? And I think the really important thing to understand is if we were told what the interest rates will be by the end of this year, we wouldn't change anything we do. Nothing. We don't invest based on what interest rates are going to be, on what the Federal Reserve is going to do, on what the monetary policy is, on what Congress is going to do. We're really simple people. We just don't look at that stuff with any real serious intent to try to make macro decisions based on that at all. What we do instead is we simply have a list of companies that we're really interested in owning because we understand them. We believe they have a big competitive advantage over their competition, and we think that their management team is pretty good and that they are a company that we can figure out the value of. That's the critical thing, is we know enough about it that we feel very confident that we have some idea where it'll be in 10 years. The idea would be as general as, we think it'll be bigger in 10 years, right? It's like on that level. We're such geniuses. We could look at something like Chipotle Grill and we can say with pretty solid comfort that, yeah, Chipotle Grill is going to put in another 2,000 restaurants. They're probably going to be bigger in 10 years. That's the level we're at. We don't try to make really careful, finely tuned predictions about growth rates and what a company's going to, what kind of earnings they're going to have. We just try to make sense out of the business. And if we can understand it and know it's going to be bigger, then we'll have a very good idea about what we want to pay for it. And what we want to pay is, a fair price. We tell you the truth, we want to buy it as if it was a private company. That's what we'd like to do. We'd like to get it for that kind of a price. So about half of what the market would normally price it at. Now, in order for that to happen, in order for really smart people on Wall Street who have major degrees from major universities to sell a company for half of what it's worth, something bad has to happen. And what we think is that bad things might happen in 2023. We don't know for sure. Certainly some bad things happened in 2022, and we started getting into the market in some companies that were influenced by that, specifically a couple of tech companies that got available to us because the tech industry, the NASDAQ, was being sold off aggressively. And the reason for that, there's rationale here. These guys aren't stupid, but they're relatively short-sighted on Wall Street. So if they look at this and they go, wow, the Federal Reserve is raising interest rates, and because they raise interest rates, the risk-free rate is going higher, which means that the market rate of return has to go higher. So if I do all this fancy math that I learned in business school, ta-da, the market should be cheaper than it is, so I'm going to sell a bunch of stuff. That's kind of where those guys go. We don't care about any of that. What we care about is, they're going to sell a bunch of stuff and it goes on sale. That we like. So in 2023, do we invest expecting these things to happen and hoping they happen? No, we just wait patiently, knowing what we want to buy, and when it goes on sale because things happen, we're there. That's it for this week's video. Thanks for tuning in, you guys. If you're finding this content valuable, please make sure to subscribe below for weekly educational content. Follow us on the rest of our social media platforms. It's all linked down in the description.